Hello and welcome back to the show. So I'm really excited today to be sitting down here with my guest Solomon, who is a real estate expert, but not just a real estate expert, but also a tech expert when it comes to real estate, specifically in the lending space. So Solomon is the co-founder at We Lend LLC, and he actually started his real estate investing journey at only the age of 21. So there's going to be a lot of interesting stories, I'm sure, that he has to share with us and a lot of insights into the real estate space, the tech space, how they work together, and especially when it comes to lending as well. So, Solomon, welcome to the show. Thank you so much for joining us here today.
Absolutely. Thank you for having me, Kobe. Pleasure to be here. Like you and I were talking, we're doing amazing in this market. It's picking up and it's going good.
Yeah, I am. I'm glad to hear that, man, and I'm excited to kind of dig right on in. But before we do that, right? Could we, would you mind just sharing a little bit about, who you are and how you got started into real estate and how you were able to combine your expertise in tech and your expertise in real estate into kind of what you're doing here today?
For sure. So out of high school, I thought I was going to be I thought I was going to be going to pharmacy school. So I worked in a pharmacy for a few years. Decided it was not for me. And at that time, my brother and my cousin were already starting in the real estate industry, where they were, they were doing acquisitions and they were wholesaling. So I gave them a call. I reached out to them and said, "Hey guys, I think I want to join on the real estate side." Of course, they brought me on with open arms. I initially started, with cold calls, calling people to see if they were interested in selling their properties. And this is right after the financial crisis that we had, right? So you're looking at like 2012, 2011 to 2012, around that range, where people were still in distress. A lot of these people's homes were underwater. So we were just trying to see if they were willing to sell their properties, and just just move on from them. So I was cold calling. I was out there door knocking on people's homes in Queens and Brooklyn. So I'm from New York City. So a lot of these neighborhoods were rough. And me growing up, I wasn't really as a social butterfly. So for me to do a cold call or for me to go door knocking took a lot for me to do. But I definitely learned from that. So that's how I got started. I was cold calling, door knocking. Eventually started getting deals. And what we would do, we would wholesale deals and then graduate into fixing and flipping properties in the five boroughs, and ultimately developing as well. And then in 2018 came around where, we were like, okay, we're not seeing as many deals that are as profitable as we would want them to be. So we decided to open up WeLend and start lending out money. Um, because we saw our lender, no matter what, anytime we saw our lender, he was making money in a sense where, we were buying a deal. If we, as the real estate investor, were losing money on a deal, our hard money lender was still making a profit, right? Because they're always have to get paid. So in 2018, we opened up WeLend. We are to date. I think we're about 6.5 years in. We funded a little north of $600 million in short-term bridge loans, fix and flip loans, and 30-year DSCR loans. So that's my quick story about myself.
Yeah, so that's pretty interesting. So you started out cold calling and door knocking, right? But you mentioned that was kind of like it's not something that comes naturally to you. And I think a lot of real estate investors and even agents, right, who are out there, starting out in the industry, they think that they have to be, the super extroverted person to, be able to be successful. But that wasn't necessarily the case for you. So, how were you able to overcome that? Was it just, your drive to go out there and be successful? No matter what? Was it just kind of following a certain blueprint to the T? But how are you able to overcome, not necessarily being this super outgoing person, but still being able to commit to door knocking and cold calling just so you can get started?
For one, I needed to make money, so I had no choice. But two, I had a great support system from my brother Moses and from my cousin Ruben, who would always push me. They would give me tips as to how to do it, because my cousin Ruben is a complete extrovert all his life, so he was able to bring that on. He was a sales guy always, so he was able to help me out with that, for me to be able to overcome my fears of cold calling or door knocking. So I quickly went from an introvert to an extrovert. Today, if someone asked me to make a cold call, I'd be like, all right, let's get rocking and rolling. But on top of it all, I also read some books as to how to overcome those fears. So a lot of sales books too. So I know that there's a book. It's not a book actually. It was actually a sales manual from Jordan Belfort from when he was doing when they were selling stocks. Actually has a lot of good information in there that really helped me out. So but yeah, that was what I did.
Yeah, so you were surrounding yourself with, obviously the right support system, and also getting educated in that space as well. So understanding that, it's something that you have to do and that it is an effective method regardless of what people are saying.
Yeah.
And then just, committing to it, right? So it sounds it sounds simple enough, but I'm sure, it wasn't it wasn't easy, but it was a simple process. Is that correct way to kind of describe that?
Yeah, it is. Yeah. And as long as you have that system in place and you follow it on an every single day basis, I think that will help you a lot. And another thing that I personally like is before I enter into conversation with a person on a cold call, I try to understand as much as I can about the person and about the property as I can, and about the neighborhood. Just for them to understand that, hey, I do have the knowledge and I do know what I'm talking about. So I think that's also very important on top of it all, just being confident as to what you're talking about going into that discussion.
Yeah, absolutely. Understanding who you're actually talking to and understanding what the outcome is that you want to happen as well. I think is super crucial when it comes to having those conversations and making sure they go as smoothly as possible.
Absolutely.
So yeah, so I think kind of shifting gears a little bit. I want to get into now, what you guys are currently doing in the lending space, right? So one of the most difficult things I think for a lot of investors, especially if they're newer or even investors who have been, maybe using traditional financing methods or, maybe even using their own cash to invest as well. It could be really difficult for them to scale their business because they don't have the right financing or funding sources, right? So, if you could just break down a little bit, what are some of the financing sources that kind of work for you guys, and what are you guys currently doing now when it comes to lending money to other investors? What are some of the best strategies for investors to be able to find that funding without having to, break the bank themselves or get into, too deep of a water when it comes to the traditional financing methods.
Yeah. I mean, when we initially got started in the industry, when we started fixing and flipping, we didn't have much to work with ourselves either. So we went out there looking for investors that would invest in us. So we found a hard money lender that would finance our projects for us. We quickly realized that our return is so much greater when we go to use other people's money, right? OPM, that's always huge. We realized that, hey, rather than going and trying to find one deal now, we're able to go and find 3 or 6 deals for us to be able to enter into and fix and flip. Um, so once we found that hard money lender, we realized how easy it was to get a loan. But this was a traditional like hard money lender. He was a private guy, literally drove around in his car. You give him a call and say, hey, I'm looking at this property in XYZ street. He would drive up to it. He sees it. He likes it. He says, how much do you need? We give him a number. We give him what the after repair value is, what the construction budget would be. If he likes the deal, he'll get you to the closing table the next day, right? We work a little bit differently. We are a little bit more institutionalized. Um, Today, we do require credit, right? Our credit requirement is at least like a 620. Um, of course, we always love working with first-time real estate investors, but we do ask them not to enter into a big project as a first project that if they were to buy one. The reason being is we want them to be able to crawl before they walk, walk before they run, right? So we want them to get into a smaller project initially for them to be able to understand how that process works, and then they can ultimately graduate into doing, like, let's say, a full gut renovation. So with that being said, we also would want to see a scope of work from the real estate investor. We need to do a quick appraisal on the property just to make sure that the value is there. They're buying a good deal, right? I have times where borrowers come to me and say, hey, well, why do you need an appraisal on the property? And I tell them the exact same thing, right? I need to understand what the value is, but most importantly, it's a safety net for you. It's a cushion for you to understand that, hey, this is the number I'm actually going to be able to sell it for. So that's also super important. And of course, entity documents, and a title report, of course, on the property. I had a good friend of mine who is a active real estate broker in New York City, who's done hundreds of millions of dollars in sales, come to me for a hard money loan, for a private loan, because he was buying a property that he was going to fix and flip for himself. We started the process, and at the end of the process, he calls me. He says, dude, he's like, I wish I knew the process was so easy and seamless. I would have been buying properties so much sooner. He's like, I thought this was so tedious. He thought it was so many documents that were required. I told him, no, we're not conventional lenders. A conventional lender would want your tax returns. They would want to see your bank statements and all this stuff. We don't require any of that. We want to make sure you're entering into a good deal, a profitable deal, and you have some sort of experience. And we'll get you to the closing table within 5 to 7 business days. So when you do go out there and you are bidding on these properties, you are technically able to go in and bid as a cash buyer. And that's what a lot of these investors are doing today. They go in as cash buyers, but they're really using a private lender behind them that's able to swiftly close within 5 to 7 days. In some cases, some scenarios, I can close within 24 hours in New York City.
Yeah. So that's actually very very beneficial for a lot of investors, right? Because when they're able to make cash offers using that strategy, then they're able to, have a competitive edge when it comes to, actually getting properties under contract. But I think, something you mentioned earlier on was it was very interesting that you did is, you guys are analyzing these properties essentially as the lender, but you're doing it also for the investors themselves, right? So they're able to have a safety net as far as having, your eye, analyzing these properties, having done as many deals as you guys have done. And that's something I've heard other investors talk about as well. If you're a new investor, you should actually look for hard money lenders or partners like, lending partners like you guys, where you've done, they have done so many deals themselves that because, you're doing this for the first time, if you're bringing the deal to them and they say, no, I'm not doing this deal, then there has to be a reason there. And you can actually lean on them almost like a mentor or coach. Is that something you would say that's kind of what you guys are doing a little bit for new investors as well, and what other hard money lenders are doing too?
Absolutely. That's what we love doing with our first time investors. They come to us and say, hey, we have this beautiful deal. I'm buying it, let's say hypothetically speaking, for $500,000. I'm putting in 50 grand in construction. I'm going to sell it for $600,000. And off the bat, I say, guys, I love the fact that you guys are looking for deals. You guys, are analyzing on your own, but there are a few key points that you're missing, right? You're missing the fact that you have closing costs. You're missing that there's so many aspects of the deal that you're missing, that you just want to enter into. But we love handholding our first time investors. No issue with that. I have a designated team that specifically just deals with our first time borrowers and first time investors, because we understand, the process is not going to be easy. There's going to be so many questions behind it because it's their first deal. It's like your first time going and driving, right? You need somebody there next to you to help you. So we love doing that. Are there other private lenders that do that? I'm sure there are a few others that are doing that as what we're doing, but there's not many out there, that would do that. And there are a lot of lenders out there that just, they just care about originating a loan. They don't really much care about the economics of a deal. But we're here to make sure that all of our borrowers succeed, and they're able to come back to us for another loan.
Right. Yeah, I think a lot of hard money lenders tend to do that because they're lending based on the asset. I think private lenders are more wanting to be more hands off. Is that kind of what you guys are doing? Is kind of almost bridging that gap a little bit with what your company is doing? Is you're using private money, but you're also kind of taking the approach of kind of like a hard money lender as far as your experience in doing deals yourself and having done that in the past.
Exactly. It's having the best of both worlds. That's pretty much it.
Yeah. And that's awesome. So you guys are doing that. And I don't think a lot of there's a lot of options or solutions out there for investors that are similar to this, right? They can either choose from hard money lenders or private money lenders as an investor. So I think it's really unique what you guys are doing. So I think it's important to talk a little bit now about what you guys are doing in kind of the tech and innovation space, right? You obviously came from a background as well, and you guys are innovating a lot in what you're doing. So how are you guys incorporating tech when it comes to your lending practices? And either is it going through and finding the right properties for for these potential investors? Is it actually analyzing them? What are you guys doing as far as incorporating tech in your lending business?
Sure. So I mean, we have few softwares that we're using right now, that we built. We have a CRM that is tailored just to us. We spent hundreds of thousands of dollars on it and hundreds of hours figuring it out. Where we have automations, um, for proof of funds for borrowers that need to be sent out immediately for them to be able to get, round robin for new leads that come into our system. Where let's say if it's a first time borrower, it gets directed to my team that handles first time borrowers, etc. So there are many things that we have in there. But there are other platforms that we also use where we have, systems um, for a construction draws team, right? So we have an app where our borrower can literally log onto the app, take pictures of the completed construction work, and that gets sent back right to us from the app, and we get a full report, from that application, and we're able to see exactly what the borrower has done and has completed in the project, rather than them waiting for an inspector to come and look at the property, inspect it. And that takes about 3 to 4 days. They literally just log into this app. They're at the site. They take a few pictures. They send it over to us. Our team sits down. They analyze it, and then we release the construction draw for the borrower. So there's many other things that we also have implemented, but those one of the two biggest things I think is huge in our industry.
Right. Yeah. So, one of the biggest things I think for you guys is, analyzing the property, right? So analyzing, making sure that, it's actually, it's going to do the things that the borrower is telling you guys it's going to do, right? So you guys spending a lot of time and effort when it comes to property analysis, and, what are you guys doing as far as um, you know, incorporating new tech into that space as well, and making sure that when you guys are lending on something that you're mitigating the risk. There's obviously going to be risk in every deal that you do, but you're mitigating that risk as much as you can, and you're not overextending yourself, if you will.
Yeah, I mean, at the end of the day, I don't think that tech is there just yet for the real estate side for analyzing deals to get you the final number just yet. And I hate to say that because my background does come from tech. I went to Pace University for computer science, and then software engineering, but I don't think tech is there just yet. And a good example of that is when Zillow and Redfin started buying homes, based on their systems as to what they think the value is today, how much work they feel like the property needs inside of it, and what they feel like the after repair value would be. They both, I think, stopped their programs within a year and a half to 2 years. That's when they realized that you still need that human touch to be able to take a look at a deal case by case, and just understand, what exactly is needed in that property, right? What type of construction is needed? High end construction, low end construction, mid construction. That on right now, I think it's probably take another 10, 15 years until, maybe even less, maybe a little bit less than that, where tech will be able to take over the analyzing portion of it. That's my 2 cents. And I said that initially when Zillow and Redfin came out with the system. I'm like, I don't think it's going to be as efficient as they think. Unfortunately, I mean, I love technology. But then, yeah, again, a year and a half later, they shut down that program because they just saw that it's tough for you to scale something like that. Because you still need that human touch behind it.
Yeah, right. We kind of saw that with Zillow, right? Not working out so well. So it has to it has to be like a combination of,
Right.
understanding how to use it, but also your personal experience as an investor, as somebody who's active in the marketplace, like you guys have been for, for the time that you guys have done it for as well. So, is that something that you guys are doing quite well, is just combining, the tech tools that you do have, but also, understanding that, these are just numbers that are being spit out, but you also have a personal experience in investing in those specific markets, and then taking those numbers and then making a final decision yourself on whether or not that's something that's accurate, or, whether it's a little bit off or even a lot off at that point.
Yeah, we do. So we try to integrate the two. Majority of the times, the numbers that we personally analyze is I would want to say about 30 or 40% of a difference than what we would see if it was based on if it was generated by tech. Um, give you another example, right? The other day, literally like 2 days ago, I was analyzing a property in Brooklyn, and I was like, you know what? Let me throw these numbers into ChatGPT. Let me see how good it is. So I threw the numbers in there. I analyzed the deal on my own, so I already knew what the numbers would look like. But it was still off. It was off by a big amount. I think it was off by like 40 or 50%. Um, but there were still some good key points that it made. So that's what I'm saying. I think within like the next 10 years, it's going to get to the point where we personally don't even need to analyze these deals anymore, and we can rely on technology to be able to decipher everything. Because there are a few key things in there that I saw. I was like, wow, this is huge. And there was another time, like a month or two ago, I was like, you know what? Let me throw this appraisal into ChatGPT. Let me see what it looks like. I had ChatGPT break down an appraisal. It was able to do that. So the information that you spit into ChatGPT is able to break it down in a nice way for you and just make it look good. Um, but for it to do its own thinking, I think it's going to take a little bit longer. Um, yeah,
Yeah, absolutely. If you've ever used ChatGPT out there, right, if you're, watching or listening to this, then you understand exactly what, what Solomon's talking about. It's not able to kind of think for itself. You have to be very specific
yeah,
as far as what you tell it to do, and what you want it to analyze for you. And I'm glad you brought that up as well, because, I'm very curious to see how you guys are incorporating AI into your business, right? Whether if it's in the back end, or whether if it's in the marketing side, which I know a lot of people are using that as well. How are you guys incorporating AI? You did mention also, kind of a follow-up question to that is, that it can pretty much replace the human touch in about 10 years. How are you guys preparing to, for that when that does happen? And what are you guys doing to set up your business now so that you guys will be ready when something like that does take over?
yeah. So I mean, what we're doing right now for that is, and I'm sure you know, so ChatGPT has a feature where you're able to teach it things. So we have a team right now that's sitting and pretty much teaching ChatGPT how hard money works, how fix and flip works, and all that stuff. Also, it's tailored for WeLend. So we're doing that. In terms of how we're integrating it in our systems today, it's on our website. So if somebody wants to chat with us, they're literally chatting with ChatGPT, um, and it's able to spit out all the answers that they would be looking for. And it's able to then make it into a lead, which gets into our CRM. Then our CRM round robins it to our sales team. We're also using it for other marketing purposes, such as editing blogs, or there are times where it can create a blog for you, which is I think is huge. So yeah, there are times where we have a blog, and then we throw it into ChatGPT, and we ask it for it to make it cleaner. I think it's huge, and I think it's a great thing. It's a great tool. Again, like you said earlier, it's a great tool to have with a human touch to it. Um, in the next 10 years, I definitely do think it is going to be hands off, and it'll be able to not do everything on its own, but do a lot of things on its own. Um, I really don't think there's any way for you to to start preparing for that until you start seeing what it's capable of doing. I'm sure, as you know, that's yeah, that's a tough target. But we do have parts of our business where we do see, ChatGPT being able to take over, right? So there are avenues that we're already exploring and thinking about having that incorporated and thinking that it will eventually replace a human, which crazy sounds insane to say, but it's there.
Right. Yeah, I know. It's something that's it's advancing very rapidly as well, right? You having a background in tech, probably understand, how tech actually evolves and advances, super rapidly, especially with a program like AI and ChatGPT. So, it is very interesting that you brought up that you guys are teaching it and feeding it information, right? Because for a lot of people out there, they don't understand that's the most effective way to actually use AI is to tailor it towards knowledge that you already have and to tailor it towards the specific business or the specific goals that you want it to accomplish for you, right? Using the information that you have, databases, information, right? Different examples and everything like that. So it's really cool that you guys are already doing that and kind of preparing for when it starts evolving as well into the future. So yeah, that's really cool. Kind of just to shift a little bit on the topic side of things as well, kind of back to more specifically on the lending side. So you guys have been kind of on the lending side for a little bit here, and for a lot of investors, a big thing that they struggle with is finding their own private lenders, right? So you guys have obviously done a pretty good job of doing that. How important would you say it is for an individual investor, right? Whether if you're doing fix and flips or, building out a rental portfolio, how important would you say it is for them to start building out their own network of private lenders so that way they can essentially not necessarily never run out of financing, but always have a source of funding for when they do have deals coming in?
I think it's as important as them being able to find a good deal and then being able to find a good contractor for the deal. Because I've seen so many scenarios where, people call me and say, "Hey, I got a loan from X, Y, and Z, and I'm having a hard time getting a draw for my construction team." Or, I got this loan and I'm past maturity, but my lender does not want to extend my loan. So there's so many things that happen there, and times where lenders just shut their doors and they're like, "Hey, we're no longer lending," and this person has 50% of the construction budgets sitting there in draws, and they're not able to release it because that lender is no longer in business. So it's very important. It's one of the most important things for you to be able to vet your lender, and know if they're the right fit for you. And it's a hard thing to do, and I think one of the best things to do is go online and read their reviews. Go online, try to go on to podcasts like this, and try to understand, who are you working with? Who are these people behind these companies, right? I think that's very important. Um, but yeah, I've seen a lot of stories where it's been really tough for people, and it really has stalled their projects and set them back for 4 to 6 months in their project. I typically, what I do is I come in and I refinance them out, and I'm able to help them complete their project and help them, sell the property off. But there's also some cases where I'm not able to even do that because the property is mid construction and the value of the property now is a lot less than what they purchased it for because the property is mid construction and it's just not worth as much as it did when they initially purchased it. So we try to work around that and try to figure it out. But having a relationship with a lender is super important. I try to tell people, have at least 2 or 3 lenders, right? Have your one go-to, have your backup. Just have a third one just to have it. The reason why you want to build a relationship with a lender is you want to build a track record with them. You want to show them how you're able to execute on these projects and on these deals. Because tomorrow, if you have a project that's a little larger than what you're used to, that lender will be like, "Hey, you know what? We've done 5 or 6 deals with this person. They paid off all these loans. We had no issues. They had a good paying history. Their construction is really nice. you know what, let's have them graduate into a larger deal. Or a case where, you're past maturity. You've got a few extensions out already with the lender, but you give them a call and say, hey, listen, I just entered into contract, or I'm refinancing out this property. Finally, I'm complete with the project. Can you give me an additional time for me to be able to sell this property or refinance out? That's really important, having that relationship with the lender. Because in many cases, if you don't have that relationship, a lender will probably tell you, hey, listen, I'm sorry. We've extended your loan so many times, we're not going to extend it anymore, and we're going to escalate your mortgage, meaning that they're going to put the property into foreclosure. Um, but there are numerous reasons as to why it's good to build a relationship with a lender. And it's not just about saving, you know, 25 basis points or 50 basis points on the rate. I think you get a lot farther having that relationship with a lender. So that's just my 2 cents. And that's how we did it when we were fixing and flipping properties. We had two lenders that we would always go to. Um, and we built a relationship with them, and then they saw that we're able to execute, and then we were able to personally get into larger projects with them, and then if you had any hiccups in the deals, they were able to help us out as well.
Yeah, and that's something that I've seen other investors do, who maintain good relationships with their lenders as well. They have private lenders to go back to over and over again on their flips, on their rental properties, right? If they want to refinance those out. And then later on, when they are ready to get into bigger projects like syndications or even raising money for a multifamily fund, it's those same lenders who go back to them, right? Because they've seen the track record, they've gotten paid on their deals, and they trust the investor themselves, right, in that same space to go in and move into bigger projects. So I think that is, it's so crucial, right, to build those relationships, because when you are ready to move up, those are going to be the same people that will work with you on those larger projects as well. And speaking of that, right, so is that something that you guys are doing as well? As a lending company, are you guys just lending on single family right now? Or are you guys kind of moving into multifamily space as well and other asset classes? From your perspective.
Yeah, that's a great question. I mean, now, we initially started WeLend. We were just funding 1 to 4 unit fix and flip properties. Then we slowly graduated and doing smaller multifamily projects and mixed use projects. Today, thankfully, we have a balance sheet now, so we're not just selling loans anymore. We're selling loans, but we're also balance sheeting loans. When you balance sheet a loan, you are able to make decisions without the secondary market telling you what to do. So hypothetically speaking, secondary market tells you, hey, we only want to buy 1 to 4 unit type properties with X amount of experience at an X amount rate. As a balance sheet lender, we're able to lend on any type of asset class that we wish to lend on, and we're able to dictate as to what we want. So today we are doing larger multifamily value add projects that we are financing. Same with mixed use properties, but we're still sticking to the 1 to 4 unit fix and flips as well. We still love doing those deals because we know for our investors, those are quick in and out type deals where they're in the project for maybe 6 to 8 months, as opposed to going to like a multifamily deal where they're probably going to be in the deal for anywhere from like 18 to 24 months. So some of our multifamily guys, what they do is they're like, hey, I have this multifamily deal where I have LPs on it, but I'm going to go out and I just found myself a 2 or 3 family house that I want to fix and flip and make a quick buck. So we see that all the time. But we're also now we're also financing ground up projects as well for developers. We are capping that right now to, I would want to say, about 8 or 9 units. In New York City, that's like peanuts on our side, but we're at like 8 or 9 units at the moment now. We are in the middle of a capital raise, so we're raising about 100 million. That should be closed by the end of the year. And at that time, we're going to be lending on larger multifamily ground ups and larger mixed use ground ups nationwide. But yeah, today I would say multifamily value add, mixed use value add, single family to 2 to 4 unit value adds, and of course the refinances, right? We're able to refinance up to 9 units residential, along with mixed use. And reason why I'm bringing that up is because a lot of people for the past 3 to 4 weeks have been calling us and have been trying to refinance their projects because the rates are coming down and they're coming down quick. So we're right now, on average, I'm like at 6.5% for my DSCR loans, and I'm sure when this podcast comes out live, the rates are probably going to be even lower than that because I'm sure you've seen the Feds coming out and talking about them cutting rates. So a lot of people have been sitting on properties for the past year and a half where they're not selling and they were not refinancing because of the high rates. And now they're all just flooding in and saying, hey, these rates are great. Deals are penciling finally, and they're refinancing out. So we're doing a lot of those as well. But we're not stopping there. We're also lending on industrial type properties as well, along with self storage. For those two asset classes, we're trying to just keep it in the metro area. I'm sorry, the tri-state area. So New York, New Jersey, Connecticut, and Pennsylvania. We'd also entertain Massachusetts. But yeah, that's where we're at, and that's the beauty of having a balance sheet. We're able to choose the asset classes that we want to lend on, and are able to help our borrowers get to the finish line. And we've seen a few scenarios where people came from other lenders because they were not able to execute. And the reason being is because a lot of these other lenders, what they do is they originate the loan and then they sell it to the secondary market. And the secondary market really dictates what you're able to originate.
Yeah, so that's
Yeah.
really cool that you guys are lending on all these types of different asset classes as well, and you guys are, obviously very experienced in the real estate space and the lending space on that as well. So yeah, so appreciate you for being on the show today. You shared actually a ton of value with us as far as understanding how lending works for an investor, why it's so important for them to get financing, and also how to incorporate tech into your real estate business as well. So for anybody out there who is interested in working with you guys or just want to know a little bit more about who you are and what you guys are doing on the lending side, what WheatLend is doing, if they can participate in one of your projects, if they can borrow from you guys or maybe even invest with you guys, what are some of the best ways for people to reach out to you or to follow you, either on social media or on online platforms?
Yeah, so for social media, you can find us at WeLend LLC on Instagram. You can also find us on LinkedIn, WeLend LLC. We are also on Bigger Pockets. You guys can find us there as well. But if you have an inquiry for a deal, or you just want some more information about what we do and who we are, you can reach out to info@welendllc.com, or you can call us directly at 212-777-7780. And if you guys want to connect with me personally, if you guys have any questions or anything, you guys can reach out to my Instagram. It's Sal_Solomons. You can shoot me a DM. I'll be more than glad to help you guys out with any questions or concerns that you guys have. We are also doing JVs with our borrowers as well. So if you have a project that you find and you either one might lack the experience or lack the liquidity, we are able to come in as your partner and partner up on that deal with you as well. So we can come in with debt and equity, which is huge.
That's actually extremely valuable, I think, for a lot of investors. They really want to have that partner. So we'll make sure to leave the links to that in the description down below. So make sure to reach out to Solomon if you guys are looking to work with him or looking for a partner in your investment deals as well. But other than that, man, appreciate you being on the show today. Before I let you leave, is there any last pieces of advice, any last tips you want to leave with the audience here before I will let you sign off?
Absolutely. Buy the right deal. Don't fall in love with the product. And another thing is get the right contractor for your projects. It's very important. You have the wrong contractor, they're going to stall your project, and ultimately it's going to bleed you out from the deal. So I think it's very important getting the correct contractor. See what their work was. Go to a project that they're currently in now, and see how their finishes are because that's very important.
Oh, absolutely. Some great advice, man. Appreciate you being on the show. Appreciate you for tuning in, and we'll see you on the next show. Take
Thank you.
care.
I appreciate it.